The bigger they are, the harder they fall. And we found that in 2008. The market was at all-time highs and then went to all-time lows. Andrew Sleeman is with Morgan Stanley, and he basically said, watch out.
The point of this is the next phase after the optimism phase is the euphoria, and that's when the markets die. And so that scares me because that's the sign of the later stages of a bull market. It's too early to say, hey, it's over, but it's certainly not early innings anymore.
And people forget that the market can go down and go down significantly. Is that something that you have to remind your people of? And, I mean, we talk about buy and hold. Do you hang in there, it'll come back? Or what is the message to your clients when they come to you with a story like that?
That's something that comes up all the time, and you hear it. Oh, the market's hit a new high, it's hit a new high. Well, look at it at a grander scale. If we go back to 40 years, okay, the market has trended up over those decades fairly significantly, right? Well, how did it trend up over decades? It had to keep hitting new highs. Like, of course you're going to keep hitting new highs if the market trends up over time. It doesn't mean that there aren't drawdowns. It doesn't mean that there's a 1987 or the tech crash or 2008. Yes, of course it happens. But a new high doesn't mean that the market is overvalued, you're ready for a crash. That is going to continually happen. Otherwise, the market's not growing, obviously, right? So I like to try and dismiss that right away. What I don't want to dismiss is he mentioned something about, are we at that euphoria stage or whatever it might be? This is the truth. This guy, nobody else, they don't know what stage of the market we're in. They just don't, right? Okay? Can you take a read of the economy and you can be like, okay, employment's starting to soften, maybe delinquencies are starting to go back up a little bit, credit card balances are starting to hit new highs, and is this painting a bit of a concerning picture that we should be worried about? Yeah, that's what we do. Anybody who's a responsible financial planner should be looking at that sort of stuff. What we don't look at is, well, is it euphoric? Are we over? Because you don't know that. You don't know that until you're through the situation.